Hi, I'm Special Agent Bobby, Special Needs Mom plus Real Estate Agent, and I am here today with your October monthly market report. So today we're going to be covering three topics in the housing market right now. First, will mortgage rates keep rising? Second, what's happening with home prices? And third, what is going on with the shining star of the housing market, which is equity? So I'm going to start by saying that there is a lot of economic uncertainty right now. And when there is certainty, people tend to hold on to the certain. So it is not unusual for you to want to push pause on your plans to buy or sell right now. But as Mark Fleming at First American says, when the economic uncertainty dust settles, those buyers and sellers who are on the sidelines will jump back into the housing game. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. So make sure that you are working with a trusted professional for when you are ready so they can help you navigate the current market. Okay, so mortgage rates. If you're watching the headlines, then you are absolutely seeing mortgage rates near 7%. Mortgage rates reach highest levels in 2008. 30-year fixed rate mortgage jumps over 7%. So what is really going on? Now, this is the Freddie Mac 30-year fixed rate from January of this year through September. And we saw mortgage rates rising very rapidly for 6 straight weeks, as you can see by the orange bars. Rates were at an average of 6.7% at the end of September. Now, this morning I checked, and they are now at 6.92%, just shy of 7%. So that's a rapid and consistent rise for 8 straight weeks. The big question is, why are rates rising so rapidly? So according to Odetta Cushy from First American, the aim of Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. What the Fed is doing is trying to bring down inflation, slow the economy. As inflation is high, mortgage rates also tend to be high. And until inflation is down significantly, we continue to see mortgage rates rise. That has an impact on the housing market, which is very intentional by the Federal Reserve right now. So Odetta goes on to say, home sales, both new and existing, are falling. Builders have cut back production in response to rapidly declining affordability. Now we know that this is easing off on the demand. An annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July. So we're seeing this cooling or slowing down in the housing market as a result of rising mortgage rates. Now, this slower pace is not a bad thing. In fact, it's created more inventory or more options in the housing market. So buyers who may have been outbid more times than they can count or have been searching for that home that they just couldn't find, that home may be out there right now. So that's a positive. The challenge on the flip side is the affordability challenge. As mortgage rates rise, it becomes more expensive to secure a home loan. So if you're looking to buy in today's market, make sure you have a trusted and experienced loan officer on your side. Okay, so let's move on to one of the biggest questions I hear these days. What is going to happen with home prices? So we'll start here. The root issue of what always drives house prices, almost always, is supply and demand. This comes from Dave Ramsey. Now take a look at this graph, showings and active listings this year versus last year. As you can see, showings are down 12.2% from last year, and active listings are up 26.9%. This is a complete 180 from the previous year, where showings were up significantly and active listings were negative. That was when interest rates were low and inventory was low. Now interest rates are higher, and listings on the market are also higher. Less demand, more supply. Now, what does that mean for home prices? Now, I'll be honest, experts are all over the map about this. Some say price depreciation, some say price decline, some say moderation of price appreciation. The only thing they can all agree on is that we are not headed to a housing market collapse, which is good. And if we take a look at the big forecasters, here is what we see for the 2023 home price forecast. Fannie, Freddie, MBA, Home Price Expectations Survey, NAR, and Ivy Zelman, here are their forecasts. Of course, the one predicting gloom and doom gets all of the press, which is probably what you've seen. But as you can see here, many of them still see home price appreciation, an average of 1.8% in 2023. So let's talk equity. Homeowners have an average of $320,000 in inflation-adjusted equity in their homes in the second quarter of 2020, all the way up to an all-time high. So an all-time high of equity in our homes. That is a major financial cushion for those who are homeowners. Now, according to Selma Happ at CoreLogic, where many households' home equity is the only source of wealth creation, as a result, recent record gains in equity and record declines in loan-to-value ratios will provide many owners with a financial buffer in case economic conditions worsen. In addition, record equity continues to provide fuel for housing demand, particularly households are relocating to more affordable areas. So there are three things here. First of all, home equity is a huge source of wealth creation. You know, the net worth of a homeowner is 40 times greater than that of a renter. So when you start to compare home ownership to renting, it is a huge differentiator for people's long-term wealth gain. Also, recent record gains in equity are a financial buffer in case economic conditions worsen. Second, for anyone who might be in a challenging situation, they have equity in their homes, and that financial buffer can help them sell their home versus having to go through a foreclosure process or be in a really challenging situation should economic conditions worsen. And third, equity is a fuel for housing demand. It's what keeps people in the housing market, keeping that demand high. So bottom line, your equity is the best protection you have against the economic downturn. So that's the market update for October 2022. If you want to further discuss the market or want to talk about buying or selling in this challenging market, please don't hesitate to reach out to me. I'm Special Agent Bobby, Special Needs Mom plus Real Estate Agent.